Please help me welcome Billy Procida.
Can I let him go?
Yeah.
Thanks, buddy.
I got one.
Okay.
Thank you. Good morning, folks. Thank you to Matt and to Fairway for putting on this great event. Could use a little better weather, Matt, but great team. Thank you for the Fairway folks for investing with us and for Redwood for being such a good fund administrator. My name is Billy Procida. I founded and run the 100 Mile Fund. It is the third fund that I've managed. We are a private equity fund formed as a REIT. We just recently converted to a REIT in order to take advantage of the new tax code whereby we used to pay ordinary income rates of up to 39% in my case, which now will come down to 27%. Our fund was established in 2011. Our main business is creating or buying loans in the $2 million to $50 million range. Our investment units are $200,000. We have about 125 investors. Many of them have been with me since the 90s. I would suggest and ask if you're interested in knowing a whole lot about us. There's 3 pamphlets on our table out there. One goes through my corporate history dating back to 1980, has every transaction that we've done and every fund I've managed since 1980. So that's available. There is a booklet of newspaper articles from the Wall Street Journal to the New York Times to many of the real estate trades and the New York Post. I'm a New York guy, so it's all New York. And these articles go back to as early as 1982, and I can give you a good background. And most importantly, relative to this event, is the fund's quarterly report. We issue a report every quarter. We don't always print it as nice as this, but I figured for the event we'd print it nice. So this takes you through every deal in the fund, the whole portfolio. Takes you through every loan that's been paid off. There's some articles about my view on the market. And if you really want to get to know me, I'd love to sit down with you. But I will say that if you look at these 3 things, you'll know pretty much everything. It's hard in under 20 minutes to tell you everything about a 37-year career. So the first thing I want to do, lawyers hate this, but you know, usually lawyers always write the disclosure statements, and I wrote my own. So I think it's worthy of a quick read, so I will tell you how I wrote it, and again, my lawyers disclaim that they don't take responsibility. What we do involves risk. What we do is also not easy. We work hard to find opportunities where we can make a fair yield relative to the risk we take. We do the best to serve our clients and our investors as best we can and do everything possible to mitigate risk and maximize yields. We are always exposed to the specific performance of the real estate market, the overall economy, geopolitical risk, Mother Nature, terrorism, and unexpected turbulence in the stock market. We believe our loans are sufficiently collateralized with real estate and other collateral and guarantees which can weather unexpected storms. We believe that real estate is a hard asset. We also believe that an asset's performance is specifically tied to those who manage it. Thus, we put careful thought into whom we do business with. Where we have concern, we supplement and support management as needed with a team of seasoned third-party professionals. We always plan for the worst and work hard to make sure it never happens. We believe that a mediocre idea implemented passionately today by the right people is better than waiting for the perfect idea to come. In business, perfect doesn't exist. One must improvise, adapt, and overcome to succeed. While there are thousands of government regulations to comply with, which don't seem to protect anyone, we pride ourselves on full transparency and do our best to be in compliance with all regulations. That's it, folks. If you invest with us, the only thing I can promise is that every deal we see that we want to do goes through the fund. The fund manages $5 million, and the fund is right next to yours, and we'll work hard to preserve capital and mitigate risk. Unfortunately, past performance is not indicative of future results. My lawyers hate that, but I hate reading their stuff. So, that said, let's go right to marketing. How do we get our business? So this, I think, will give you a quick 1 minute. This is a TV commercial that airs throughout the New York City market and CNBC and a lot of the local news shows, some of the real estate shows. So, gang, you want to roll the commercial?
Hi folks, I'm Billy Procida, founder of Procida Funding. I lend money when banks can't or won't. It's no secret today that with all the government regulations, it's getting harder and harder to get a commercial bank loan. As a private lender, it's different at Procida. There's no red tape or multiple layers of approvals. You'll get the personal attention and the fast response you need. Since 1995, we have financed over $3 billion of real estate projects and businesses. Whether you're a business owner or a real estate developer, chances are we can provide you the capital you need when you need it. Our 100-mile fund has financed all kinds of real estate from hotels to swim clubs, medical offices, service stations, shopping malls, industrial properties, and more. Refi Magazine recently named us Non-Bank Lender of the Year. You'll get the personal response that only a private lender like us can deliver. So if you need $500,000 or more for your commercial real estate or business, skip the bank's red tape and go with a pro. Procida Funding. I'll be the first face you'll see and the only approval you'll need. Call me directly today.
So yeah, I am the first face because I'm the receptionist. When you come to our office, everybody thinks it's bizarre, but I learned it from Mike Bloomberg when I went to his office back in the 80s. He literally was the receptionist. So we do things a little differently. We have an open floor plan where when you come in, I see you first. I decide I like to do business, I pass you down the line. So things happen very quick. We have to go through about 200 deals to get the 15 to 25 that we will do. That commercial, by way of example, we spend probably 100 grand on that. That's our money. So that doesn't come out of the fund. That comes out of our pocket. But we believe that we need to spend money. We need to go to events. I speak at probably 20 events a year in front of audiences from 50 to 250, pitching why you want to work with us. And I try to shake every hand in the room when possible. That's why we get so many deals in. But we're very, very selective, and frankly, at this point in the market, we're extremely selective. Let me try to take you through the team. So I don't want to talk about myself, but I've been 37 years, and my team is as strong as you can get. Alan Lazaroff right there. Alan's been with me 20 years, started as my accountant, joined as our CFO last year. Allie Betts, our controller. Whoops, I made a mistake. Take me back. Allie Betts, our controller, has been with me 20 years, and she's kind of the glue and the mother of the office. Michael Cohen, Derek Weissman, and Brian Foley have been together for 4 years. Derek also interned with me for 2 years, and I know Derek since he's about... Mike's family, Mike's father was a legend in the servicing business, and also Brian Foley I've known most of my life. Caroline Smythe runs and bookkeeping. Lauren Donnelly runs our marketing. I know her since she's a kid. She went to school with my daughter. Kyle Smythe I held as a baby. I know his father since second grade. His father's also an investor. And missing is a recent hire, which is one of my favorite things that has happened to me. My first investor when I was 18, who gave me $400,000 in 1981. And he was one of the biggest builders in Pakistan. Gave a 18-year-old kid $400,000. It's like $4 million today. His grandson walked in my office, had an offer from Goldman Sachs, and said, "I'd rather work for you," which was very, very nice to have happen. So we had a great team, but that team's backed up by third parties. These third parties are part of the due diligence process and the asset management process. Worth noting, more than half of them are investors in the fund. Particularly, just to note, O&S Insurance, Max Osa, I went to kindergarten with him. My partner at Cole Schatz, Leo Leva, who's also an investor, I went to high school with him. I didn't go to college, so you'll hear a lot of stories about people from grade school and high school. I gotta go quick here. Boy, so 100-mile fund summary. Since October 11, we did 107 loans, $588 million in total. 82 have already paid off, which is $392 million. Our net distribution since its annual is 13.05. We do pay a 7.5% dividend over the course of the year divided by 4 quarters. I have never missed a dividend since 2001, my first fund. I have never missed a quarterly dividend, and I ain't going to now. So loan originations, take you through that 1 second. You'll see we grew as the fund grew, but you'll see I pulled back here. Why did I pull back? Because I didn't feel good. And if I don't feel good, I just don't do any work. And it's easy to put money out, it's hard to get it back, right? So when I don't feel right, I said, let me take a pause. But now in 18, we did 150. First quarter, we already 21 million. Now, more importantly, as a lender, you want to see your book roll because we're short. Our average loans are 12%. So we don't want anybody to hold our money for 3 or 4 years. You can't afford it. Real estate has a window where you can make 12%, and then it stabilizes and you can't make 12% on real estate for 4 or 5 years. So you see our book rolls pretty good. We got kind of slammed in the end of 17 and the middle of 18. We had a lot more payoffs, frankly, than I wanted, but at the end of the day, that's a good thing. You'll see our returns. So let me talk about our returns, and let me talk about our worst year, which was last year. So what happened last year was we literally had, and if you read our management report, we had $70 million of loans pay off in August and September of last year. Well, that's a great thing. It killed us because, frankly, you can't just get it right back out. So unfortunately, we had to take that money, put it in at 2% in a money market account while we were looking for more deals. And fortunately, by the end of the year, we got fully invested again. So for our first quarter of 19, we're back up to 12.5. Our target, mind you, is only 10. And if you ask me as an investor, what's my target? My target is not to lose money, number one. Then I try to make 10%. And occasionally, we're lucky, and through some use of leverage, sensible leverage, we sometimes get up to 14 and 15 as we did earlier. Members' capital continues to grow. We're now over 61 million as of today. That was the end of the quarter, was 59.5. Our target raise is $100 million. By the way, we're open-ended, annual redemption. This is my last fund, my only fund, and I will never have another fund. So as long as I'm alive, this fund will keep going. When we hit 100 million, I'll decide whether we want to make it bigger. But with $100 million and credit facilities, which are about 100, that enables us to do $200 million worth of business. And I've had 150 people work for me in my prior life. I don't want that anymore. We've got a 10-person team. I got great third parties, 20, 30 deals a year. I make a good living. I ain't gonna kill it, but it's a fine business. We stay diversified. That's key to everything. We're also diversified in the diversification. I had to check my time. Some sample deals, and I apologize for talking fast, but in Jersey City, Gold's Cove, a good example. This we did in 11, which was a discounted debt buy, and that was a $4 million loan. There was a foundation that came with it. We built this building, $68 million, made a 12.5% return. In Philadelphia, we have a tendency to draw circles. So we started with one building and ended up with $117 million of loans. And we took this beautiful building that was vacant, and now it's a shining star, and been gangs of articles, won a bunch of awards. The Philadelphia Opera House, you can see over here, they were about to tear this down. That's what it looks like today after our $56 million loan. Speaking New York, same thing. We went up, did one little loan on a brewery to create a brewery, Hudson Valley Brewery right there. Ended up doing a bunch more deals in the same market. And as you see, I like taking old things and making them nice. This was a vacant building for 30 years. It's now 20-something condos. We thought they'd sell for $350. They ended up selling for $600. God bless the developer. He made a lot of money. We made our 12%. NIAC, this is a unique deal. The college was in debt. They weren't making money. Their bank wouldn't listen to them. The appraised value is $100 million, right at the foot of the Tappan Zee Bridge. So we loaned them $38 million to give them enough time get the property on the market. In Camden, we just got paid off. This will tell you what the opportunity zones are like. We originally thought this was worth $8 million. We loaned 6-7. Guy ended up selling it for $14 million after they put it in an op zone. Some of our money's free. These nice people have been in business since the 70s. Their bank loan got bought by a hostile Wall Street group. They owed $4 million. We got the bank to take $1 million. The Wall Street group to take $1.7 million. So we saved this 30-year-old, 40-year-old family business, which is always a nice thing to do. Okay, so I'm going to do a couple of quick Q&As. How much money do I have in the fund? $3.5 million, and my partners in the company also have another $2.5 million. Is any of it borrowed? No. How do you report earnings, and how often do you report? We report quarterly. You're allowed to our office anytime, unannounced. There is no wait. You can come to our Tuesday meetings where we go over pipeline and portfolio, and we do an annual audit. So is our fund audited? Yes, we do an annual audit. Redwood is also our administrator. I believe in complete transparency. If you give me your money, it's like giving me your children. So these two questions people find bizarre, but why not? Because I want to know it. When I give any money to any of our borrowers, I got to know everything. So yes, we provide both the fund manager's tax returns and my personal tax returns. What are the terms of your fund? I think I outlined them before, and I'm running out of time. But we're open-ended, 2.5% asset management fee on the capital only. So we don't charge on the $200 million portfolio. It's only on the $60 million capital. And the fund has no expenses. So advertising, staff, everything we pay for except for the audit. How big do we want the fund to be? I think we're gonna get to 100 and take a breather. What keeps me up at night? Everything. Anybody thinks any of this is easy? It ain't easy. This is, I don't care what side of it you're on. You wake up fighting, you go to bed fighting. By the way, I just want to show you, size everything up into one thing. You see these socks? Can you see them? It's a heart with a smiley face. That kind of sizes up everything. Heart two ways. You need to love everybody. Because if you don't love everybody, the people you work with, the people that are coming in, your clients, your investors, well, what's it all about? But the heart is also about, you need the heart of a warrior. Because if you don't think that this is war, trying to make yields like this is war. You need to be all over everything all the time. So that's what keeps me. My view of the economy is, I just gave a speech. This is only the crash of the 1%. Last time was the crash of the 99%. This is only going to be the crash of the 1%. I don't have time to go through all these heat maps because I'm down to 1:30, but it's real simple. We're at 1.2 million housing starts. We're supposed to be at 1.5 million. We had 2 million starts in 2004. We dropped to almost 800,000. This heat map, which is in the booklet, you'll see, and there's an article called The Time for Pause and Urgency. All of the units we're producing are in the major cities. They're elevator buildings, which means they're concrete and expensive. In New York City, and I'm just going to skip real fast. If I can do this, I'm going to have to skip. Just take a look at this chart, and this is why I left New York City. Housing starts jumped to almost 60,000 units. Look at where it was. This was kind of a little heady. Here's where we should have been. We dropped down because the banks ran away. But look at that, and they're all being delivered now, which is why if you go look at New York City real estate, the market 10 million up has already dropped 30%. Don't worry, we ain't in it. So I have a couple other charts, but I'm just going to give you one. While delinquencies on real commercial loans are down, look at this chart. We've gone from, this was the real peak, but then it really peaked in 08, which it shouldn't have. Should have stopped here. Then this was just stupidity. The banks all retreat. But look where they are now. So what do? Re-underwrite your loans, number one. We re-underwrite every day. Matt's been at our meetings. We underwrite everything. Basically, what do we look for? Anything ugly, anything old, and any place dangerous. Right? You cannot lose money going into a bad neighborhood and fixing it. And you'll see in my book, I spent 20 years of my life in the South Bronx. Condos that I sold in the 80s for $99,000 are now selling for $500,000. So apparently, you're not allowed to run over. I see there's a big zero here. I thank you all for your time. It's better sitting down, all right? But come by my booth.